Preparing for a Record to Report RTR Specialist at Accenture interview? You've reached CandiMentor, and this video is for you. We'll walk through 20 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Can you explain the Record to Report cycle end to end? Record to Report is the finance process that converts accounting activity into reliable financial reporting. It starts with subledger postings, accruals, allocations, and journal entries, then moves through reconciliations, adjustments, close activities, consolidation, and reporting. In an Accenture environment, I would focus on accuracy, controls, timelines, and clear communication with client finance teams, because RTR output drives management reporting, statutory accounts, audits, and business decisions. While answering, focus on the full RTR flow, from transaction recording to reconciliations, close, consolidation, reporting, controls, and how accurate RTR output supports client decisions and compliance. Question 2. How do you prepare and post a journal entry in an RTR role? I start by understanding the business reason for the entry, not just the numbers. Then I identify the correct GL accounts, cost centers, entity, currency, and period. I prepare the debit and credit, attach support, add a clear description, and route it for approval if required. After posting in SAP, Oracle, or another ERP, I verify the impact on the trial balance and retain documentation for audit and control review. Make sure to cover business rationale, supporting documentation, debit and credit logic, approval workflow, ERP posting, reference details, and post-entry review to ensure completeness and audit readiness. Question 3. What makes a good balance sheet reconciliation? A good reconciliation proves that the balance sheet account is valid, complete, and supported. I compare the GL ballots to independent evidence, such as bank statements, subledger reports, schedules, or confirmations. Any difference is explained, aged, assigned to an owner, and followed up. I also ensure the preparer and reviewer sign-offs are completed on time. The goal is not only matching balances, but reducing risk before reporting. In your answer, talk about matching general ledger balances to independent support, aging open items, identifying reconciling differences, ownership, review evidence, and timely resolution of exceptions. Question 4. How would you handle an accrual during month-end close? Accruals are about recognizing expenses in the period they are incurred, even if the invoice has not arrived. For example, if services were received in March but invoiced in April, I would accrue the March expense using a PO, contract, vendor confirmation, or historical estimate. I would document the basis, obtain approval, and set it to reverse next month. When the actual invoice arrives, I compare it against the accrual and analyze any variance. Be sure to mention matching principle, estimating expenses, using purchase orders or confirmations, reversing entries, documentation, approvals, and follow-up when actual invoices arrive in the next period. Question 5. What steps do you follow during month-end close? Month-end close is a controlled sequence, so I follow the close calendar closely. I complete recurring journals, accruals, allocations, depreciation, intercompany postings, and subledger checks. Then I perform reconciliations, review open items, analyze variances against prior month or budget, and resolve exceptions with stakeholders. I track each task status, escalate blockers early, and ensure approvals are captured. My focus is a clean close, minimal late adjustments, and reporting delivered within SLA. While answering, focus on close calendar discipline, journal posting, accruals, reconciliations, variance analysis, intercompany, fixed assets, review meetings, issue escalation, and reporting deadlines. Question 6. How do you investigate a variance in the profit and loss account? I first define the comparison, actual versus budget, prior month or prior year. Then I identify material movements by account, cost center, entity, or product line. I drill into transaction details, check unusual journals, accrual reversals, missing invoices, reclasses, and one-off items. If needed, I contact operations or FP&A for business context. I summarize the root cause clearly, distinguishing accounting timing issues from genuine business performance changes. Make sure to cover comparison base, materiality, drill down by account and cost center, transaction analysis, accrual timing, reclasses, business explanations, and communication to stakeholders. Question 7. What are common controls in the RTR process? RTR controls are designed to prevent or detect misstatements before reports are issued. Common controls include journal approval workflows, maker-checker review, restricted ERP access, segregation of duties, balance sheet reconciliation reviews, closed checklist sign-offs, and variance analysis. For SOX clients, evidence quality is critical. Who prepared it, who reviewed it, when and what was checked. I treat controls as part of the process, not an afterthought. In your answer, talk about maker-checker review, journal approvals, segregation of duties, account reconciliations, closed checklists, access controls, evidence retention, SOX relevance, and exception monitoring. Question 8. How would you manage intercompany mismatches during close? Intercompany mismatches need quick coordination because they affect consolidation. I would compare balances with the counterparty entity at transaction level, checking invoice numbers, dates, currencies, entities, and GL coding. Common causes are timing differences, FX rates, missing bookings, or posting to the wrong affiliate. I would agree corrective entries before the cutoff and escalate unresolved items. The key is preventing mismatches from creating consolidation and elimination issues. Be sure to mention counterparty confirmation, transaction level matching, timing differences, FX differences, wrong entity or account coding, elimination impact, escalation, and agreed cutoff deadlines. Question 9. What is your approach to fixed asset accounting in RTR? For fixed assets, I focus on whether the cost should be capitalized or expensed based on policy. Once approved, the asset master needs correct category, useful life, location, cost center, and depreciation method. During close, I run or review depreciation, process transfers or disposals, and reconcile the fixed asset register to the GL. For assets under construction, I monitor capitalization timing, so depreciation starts only when the asset is ready for use. While answering, focus on capitalization criteria, asset master creation, depreciation, transfers, disposals, asset under construction, reconciliations between fixed asset subledger and GL, and control over approvals. Question 10. How do you ensure accuracy when working under tight close deadlines? Under tight deadlines, I rely on structure rather than rushing. I use the close checklist, prioritize high-risk and dependency tasks, and complete standard validations before submission. For journals and reconciliations, I check account codes, periods, amounts, support, and approvals. If something is blocked, I escalate early with facts and options. Speed matters in shared services, but accuracy and control compliance matter more, because late corrections damage trust. Make sure to cover prioritization, close checklist use, standard templates, validation checks, early issue escalation, reviewer communication, avoiding shortcuts, and balancing speed with control compliance. Question 11. What experience do you have with ERP tools like SAP, Oracle, or BlackLine? I have worked with BRP and reconciliation tools from a process perspective, extracting GL data, preparing and posting journals, reviewing trial balances, running reports, and supporting account reconciliations. In SAP or Oracle, I pay close attention to company code, account, cost center, period, and document reference. In tools like BlackLine, I focus on support, aging, certification, and reviewer comments. I am comfortable learning client-specific configurations quickly. In your answer, talk about practical activities performed in systems, such as journal posting, GL inquiry, reconciliations, reporting, workflow approvals, extracting data, and learning new client platforms quickly. Question 12. How would you deal with an unreconciled balance that has been open for several months? I would not simply carry it forward. First, I would review the aging original transaction, support prior comments, and whether it represents a real asset, liability, or error. Then I would contact the process owner, AP, AR, treasury, or business team, depending on the account. If the balance is invalid, I would propose an adjustment or write-off with approval. I would also identify why it remained open and suggest a preventive action. Be sure to mention aging analysis, root cause investigation, documentation review, stakeholder follow-up, write-off or adjustment approval, risk assessment, and preventing recurrence through process fixes. Question 13. Explain the difference between a provision and an accrual. An accrual is usually for an expense already incurred where the amount is reasonably estimable, such as utilities or professional fees not yet invoiced. A provision involves more uncertainty around timing or amount, but there is a present obligation and probable outflow, such as litigation or restructuring. Both apply the matching imprudence concepts, but provisions require stronger judgment and reassessment. In practice, documentation and approval are important for both. While answering, focus on certainty, measurement reliability, timing, obligation, common examples, accounting judgment, and why both require documentation and periodic reassessment. Question 14. How do you support an external or internal audit in an RTR process? Audit support is about giving complete, traceable evidence without disrupting close activities. I review the request, understand exactly what the auditor needs, and provide reconciliations, journal support, approvals, invoices, schedules, or variance explanations. I ensure documents tie back to the GL and period requested. If something is unclear, I ask before submitting. I also track requests and due dates because delayed or incomplete responses can create audit issues. Make sure to cover audit request handling, evidence gathering, reconciliation support, journal backup, control documentation, responsiveness, professional communication, and ensuring responses are complete and traceable. Question 15. What KPIs or SLAs are important in an RTR shared services environment? In RTR shared services, KPIs measure whether finance delivery is timely, accurate, and controlled. Key metrics include close tasks completed on time, journal first-time write rate, reconciliation completion percentage, open item aging, number of late adjustments, SLA adherence, and control exceptions. I also value qualitative feedback from client stakeholders. Hitting metrics is important, but I would not sacrifice quality just to show green status on a dashboard. In your answer, talk about timeliness, accuracy, first-time write rate, reconciliation completion, journal rejection rate, aging of open items, close adherence, control compliance, and client satisfaction. Question 16. Describe a time when you found an accounting error. How did you handle it? In one close, I noticed a cost account had an unusual credit balance during variance review. I drilled into the GL and found a reversal had posted twice. I documented the issue, confirmed the correct treatment with the process owner, prepared an adjusting journal, and obtained approval before close cutoff. After correction, the profit and loss aligned with expectations. I also suggested adding a duplicate reversal check to the close review. Be sure to structure the response using situation, action, result. Cover analysis, communication, correction entry, approval, impact assessment, and how you prevented repeat errors. Question 17. How do you handle stakeholder pressure when a client wants a quick adjustment posted without full support? I would stay professional and explain that every adjustment needs adequate support, especially in a controlled RTR environment. I would ask for the minimum evidence needed, such as calculation, approval, business reason, and account coding. If the deadline is urgent, I would escalate to the team lead or controller with the facts and risk. My approach is to help the client meet timelines while protecting auditability and policy compliance. While answering, focus on professionalism, control discipline, explaining risks, requesting minimum evidence, escalating appropriately, offering alternatives, and maintaining client service without compromising compliance. Question 18. What is the role of automation in the RTR process? Automation improves RTR by reducing repetitive manual work and making exceptions more visible. Recurring journals, reconciliation matching, close task tracking, and report generation can often be automated through ERP workflows, Blackline, or RPA. The benefit is faster close, fewer manual errors, and better audit trails. However, automation does not replace accounting judgment. People still need to review exceptions, validate unusual balances, and decide whether outputs make business sense. Make sure to cover automation opportunities, recurring journals, reconciliations, workflow tracking, exception reporting, RPA, standardization, reduced manual errors, and the continued need for human judgment. Question 19. How would you transition a new RTR process from a client to Accenture delivery? A good transition starts with understanding the current process, not assuming the documentation is complete. I would participate in knowledge transfer, capture step-by-step procedures, identify systems, reports, controls, dependencies, and key contacts. During shadowing, I would observe the client perform tasks. During reverse shadow, I would perform them while the client validates. After go-live, I would track issues, stabilize delivery, meet SLAs, and look for standardization opportunities. In your answer, talk about knowledge transfer, process documentation, shadow and reverse shadow phases, control understanding, system access, issue logs, SLA alignment, stabilization, and continuous improvement. Question 20. Why do you want to work as an RTR specialist at Accenture? I am interested in Accenture because RTR here combines accounting discipline with large-scale client delivery. The role would let me work on close reconciliations, reporting, controls, and process improvement across complex client environments. I also like that Accenture emphasizes technology, standardization, and continuous learning. My strengths are accuracy, ownership, and structured problem-solving, which fit well with RTR work where deadlines, controls, and stakeholder communication all matter. Be sure to connect your answer to Accenture's global finance operations, process excellence, client delivery model, technology exposure, learning culture, accounting discipline, and your interest in close and reporting. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.